Topic 1. Geopolitical tensions around Iran and the Strait of Hormuz. Tensions from the US-Iran conflict and subsequent US blockade have sharply reduced shipping around the Strait of Hormuz. The Pentagon says US forces have turned back 13 ships and warned that violations could meet seizure or force. Normal flows through the strait account for roughly 20% of global oil, and analysts estimate roughly 13 million barrels per day of supply have been disrupted, with tanker transits falling as much as about 90% on some days. The IEA warns Europe may have maybe 6 weeks of jet fuel left, raising the prospect of flight cancellations as airlines face surging fuel costs. For example, EasyJet reported roughly £25 million of extra fuel expense in March. Oil jumped, Brent around $95 to $98, WTI about $91 to $92. Markets and central banks are repositioning, and the IEA cautions that damaged Middle East energy assets could take months to years to fully recover. Topic 2. Markets and central banks remain on edge as stocks hit records. Investors have rallied on hopes of Middle East de-escalation and strong corporate results, pushing the S&P 500 and Nasdaq to fresh record closes led by the large tech names, even as the underlying geopolitical and oil risks persist. The Iran war first spiked oil and risk aversion, then temporary ceasefire expectations and falling oil helped a quick market rebound, but participants still price the possibility of renewed volatility. Debate is active over the dollar's reserve status. Deutsche analysts warn oil settlement shifts could weaken the dollar. Franklin Templeton says replacement is unrealistic. With global FX reserves falling from the 1999 70% range to roughly 50% in dollar share, a likely scenario is gradual erosion rather than sudden replacement. Bond yields and central bank decisions, ECB, Fed, remain sensitive to energy shocks and macro data, and investors emphasize that policy uncertainty and geopolitical shocks could reintroduce sharp volatility. Topic 3. Live Nation jury finds illegal monopolization in ticketing. A U.S. federal court jury found Live Nation and Ticketmaster illegally monopolized major arena and amphitheater ticket markets, concluding patrons overpaid on average about 172 cents per ticket at roughly 257 key venues, around 20% of tickets. The verdict addresses liability only. Damages and remedies, including possible structural changes, divestitures, or limits on fees, will be decided later by the court. The DOJ had negotiated a separate settlement with Live Nation that many states rejected, and continued litigation led to this jury finding. Live Nation denies wrongdoing, says it will appeal and pursue pretrial motions, and has already set aside some funds for damages. The ruling underscores stepped-up antitrust enforcement in entertainment, sent Live Nation shares down and competitors' stocks up, and highlights material legal risk for dominant platforms. Topic 4. Rapid AI pivots, model releases, and platform tensions in tech. Allbirds announced a dramatic pivot, selling footwear and brand assets, about $39 million, renaming itself New Bird AI, buying GPUs to offer GPU as a service, pursuing a $50 million convertible note and seeking to remove B Corp provisions, a move that sent its shares up 500 to 600%, but drew skepticism about execution, resources, and legacy labeling. Bubbles like the long blockchain episode. Anthropic released Claude Opus 4.7 as a stronger general model with improved engineering and instruction following, applied safety blocks for cyber risk requests, and continues a limited, more secure Mythos Glasswing program for sensitive enterprise use. OpenAI is shifting toward enterprise and professional customers, with a new model codenamed Spud coming, hiring sales leadership and prioritizing monetization amid rising compute costs. Separately, large Amazon sellers staged a 24-hour ad boycott over ad payment and payout changes that aggravate cash flow pressure, all of which highlights fast repositioning, infrastructure and security constraints, regulatory